Hi, this is Suzanne Long, Professor of Accounting with Jackson College. Today we're going to be calculating ending inventory. There's lots of ways to calculate ending inventory. There are several different methods and they're all GAAP. They're all generally accepted accounting principles methods. They're all perfectly acceptable, reasonable methods to use, but they're going to give us different results. So depending on which inventory method we use, our ending inventory might be a little bit bigger or smaller than another method, and correspondingly cost of goods sold could be a little bit bigger or smaller than the other methods. And then that affects the financial statements. So right out of the gate, maybe over here, ending inventory affects the balance sheet, right? Asset account. Cost of goods sold may very well be the largest cost item on the income statement. Huge effect on the income statement. So depending on which method a company uses, it's going to have a little bit of an effect on the financials, and it's something that's very carefully disclosed in the financial statements themselves. So we're going to be doing this particular problem right here, and all the information we need is in this blue box, and we're going to do the specific identification method. We're going to do FIFO, LIFO, and weighted average. So we're going to use this information to calculate inventory 4 different ways. And then I'm going to kind of check and see how we're doing on time, and this problem, this 1B, would be another time around with weighted average and LIFO, which are the two methods that students have told me over the years, or I can tell when I look out across the room like, oh, we need to do more with that one. So depending on how this goes, let's take a look at those other methods too, or do them another time around, another shot. Okay, let's start with specific identification. This is perhaps the most intuitive of the inventory methods. It's saying, hey, if I purchase something and I sell it, I'm going to track it that way. So let's start right out with July 1st, beginning inventory, 300 units, 13 per unit. So we're going to be right up here. We're not purchasing, we're not selling. This is the balance. So we've got 300 at 13. I have some formulas in here that are multiplying, and I'm just going to let those multiply. So it's equals this one asterisk times this to get this total value amount. So that's what we've got for our opening balance, July 1st, beginning inventory. July 9th, we've got a sale of 200 units. Now, which ones were sold? Let's look up here in this little description here. July 30, 15, beginning. Okay. That's given us some clues about what's left, but there isn't anything we need for this one. Sold 200 at $20 per unit. 20 is the selling price, and this whole table is all cost. We're not doing anything with selling price. So I want to know which units were sold and how much did they cost. Well, we sold 200 that cost 13. We sold 200 of these units. Let's cost that out, multiply. And then how many are left? We had 300, we sold 200, so there's 100 left. Easy math, or you can do a formula. And that takes care of July 9th. Purchased 120 at 12. Alright, so now we've got a purchase. So we're going to be in this area here, purchases. Purchased 120 at 12. So we got this asterisk times that. Now over here in the balance area, we've got 2 layers of inventory. We've got these that were hanging around from before, and now we've got these. We've got these new ones. So keep them in order. We had these first. I'm doing a cell reference, and I'm doing a cell reference. So I had these first, and then I bought these. So I've got these $13 ones before I had these $12 ones. That takes care of the 16th. Let's look at the 18th, another purchase. Purchase 300 at 10 per unit and multiply. Now we've got 3 layers of inventory. We've got the $13 ones and the $12 ones, and now we're adding some $10 ones. I'm going to use a lot of cell reference here. Equals that one, equals that one, equals that one. Oops, nope, not there. Equals the 120. I want the 12s next, and then the 10s. Yep, you could input. Yep, there's lots of different ways to get these numbers in here. I'm thinking what's the fewest keystrokes and playing around with that idea today. Okay, so right now we've got all of this inventory, 13s, 12s, and $10 ones. Now we're going to figure out which ones were sold. So we're going to be looking right here, June 30 sold 150 units at 20. Again, the 20 is the selling price, and we don't care about the selling price. We want to know the cost. Cost. We want to know how many $13 ones, how many $12 ones, how many $10 ones were sold. Right here in sales, this whole section right here is going to add up to 150. But I'm kind of typing that in sort of, like penciling it in, and it's going to change. I need to know which ones were sold. Come back up to the description here. July 30 consists of 15 from beginning, 35 from 16, and 100 from 18. Let's play with that. 15 units from the beginning inventory, so 15 at 13. 35 from the July 16th. 35 July 16th, those are the $12 ones. And 100 at the 18th. The July 18th was the $10 ones. So right here, this area right here, I'm typing in what they're giving us here. Assume that July 30 consists of. Now it doesn't say sale or what's left, or, now that I'm looking at it, this is, I think this is supposed to go over here. I think this should say, assume that the July 30 sale consists of. Let's get that in there. So all this needs to go right here. Okay, we can do that. 15 at 13, 35 at 12, 100 at 10. And then these amounts right here are going to change. Okay, 15, 35, 100. Right there, we added in the word sale. Okay, yeah, that's better. 15 plus 35 is 50 plus, so that's the 150 right here. How many were sold? And they're specifically identifying and telling us which ones were sold. So now to fill in here, this is the what's left. This is the balance column. I'm like, well, how many of the $13 ones are left? So I had 100, subtract 15, so I got 85 of those left. And then here I started with 120, subtract 35, so I got 85 of those left. And here I had 300, and subtract 100, I sold those, so I got 200 left. And then I just want to kind of check and see what's going on here. Oh, I still need to finish right here. I did this and this, but I didn't do my multiply. This, multiply, and this, multiply, and this one, multiply. Okay, now I can kind of just take a look at this, and you see the colors that I've got input in here, and we can maybe talk about this whole thing now that we've got one completed. Here, of course, we're running the dates, keep everything chronological. Here's our balance. When you've got more than one thing on a date, keep it chronological. Notice the sections. Purchases. 2 purchases, 16th and 18th. We can come back up here and see, yep, 2 purchases, 16th and 18th. Total purchases right there, $4,440. Sales here in the middle. We got a sale on the 9th and a sale on the 30th. Let's come back up here. Yep, 9th and 30th. So 2 sales. Notice that this sale was everything. That was the only kind of inventory we had. But notice down here we've got 3 different kinds of inventory to choose from. So we're told, we're given this information, how many of which kind were sold. So sales, 2 dates, add everything up. Right here is cost of goods sold. Purchase, cost of goods sold, and ending inventory right here, $4,125. So here this is, as of this date, as of July 1st, we have $3,900 in inventory. As of July 9th, we've got $1,300. As of this date, how much? As of this date, how much? As of this date. So at the end of the month, this total right here are these 3 added up. You add those 3 up together and you got that for total ending inventory. I think I'd like to add just a little tag here. I'm going to do apostrophe equals cost of goods sold. 4215 equals cost of goods sold. Apostrophe equals ending inventory. 4125 equals ending inventory. Again, remember that this is all cost. Cost. All amounts in these tables are at cost. Okay, very good. Now we're going to go on to the next method, which is called FIFO. And FIFO is first in, first out. Alright, so moving on to FIFO. I want to be able to see this right here, so I'm going to do a freeze screen right here. Freeze panes. So we can roll down. You get my eyes, that's kind of weird. So you get that. We need this blue stuff right here. We need to be able to see this while we're working. Okay, July 1st again, beginning inventory. Same, units. How much per unit? And again, those formulas are in there that are multiplying for us. So this is equals this times this, 3,900. July 9th, sold 200. Okay, so July 9th, we want to be right here for the area for how many units were sold. It says we sold 200 at 20. Now remember, this is the selling price. We don't want the selling price, we want cost. What's the cost of the 200 units that were sold? The cost is 13. And then we need that times that. Now we're going to see how many are left. What's our balance on July 9th? So we had 300, subtract 200, so yeah, we've got 100 left at 13. And there's that multiply formula. 100 times 13, 1,300 as of the 9th. Alright, now the 16th. 16th, we purchased 120 at 12. So 16th, we want to be right here in the purchases area. 120, 12, and multiply. Now we've got 2 batches or 2 layers of inventory. We've got the 100 at 13 left from the 9th, and now we've got another batch or another layer of these $12 units. So you want to be careful and keep these in order. I'm going to use a cell reference here. We've got 100 at 13, and we've got 120 at 12. Okay, so as of July 16th, we've got $2,740 in ending inventory. See how it's given me this little underline here? I don't want that underline right there. I'm just going to fix that real quick. taking more to fix than I thought it was going to take to fix, but anyway. The reason why I put the double bold in there is so that you see all of this right here is related to July 16th, and that's why those bold lines are in there. Yeah, I see what's going on here. It's doing kind of a goofy thing over there with the lines. Okay, so I'll keep fussing with the bold as we go. All right, July 18th. July 18th purchase 300 at 10. Okay, 18th purchase. I want to be right in here for purchases. Purchase 300 at 10 and multiply. This one, asterisk, multiply, and so we got our 3,000. Now we've got $13 ones and $12 ones and $10 ones, and you got to keep them in order. So we got these, we got the $13 ones, and now we got the $12 ones, and we got the $10 ones. And I'm going to put my big underline here. So now, as of July 18th, we've got these three amounts. So we got $5,740 in inventory as of July 18th. July 30th, this is our sale of 150. 150 at 20. Remember, 20 is the selling price, and we don't want the selling price. Remember, this is all cost. So somehow, some way, I'm going to end up with 150 in here. But I need to figure out which ones were sold. And this is where, let me go up just a little bit. This is where FIFO comes in, the FIFO method. The first ones in are the first ones out. Remember, we're shooting for 150. I'm going to delete that. So the first ones in are right here. The $13 ones are the first ones in. Those are the first ones in. And really all of those are being sold. So the first ones in were the $13 ones. We got 100 of those left, so all of those come out. Let's multiply, get this completed right here. And we want 150 total. So the next ones would be the $12 ones. And we need a number right here so that this adds up to 150. So that's easy to do, but sometimes it might not be easy to do. You could do the total that we sold minus how many we've already accounted for. So we got 150 here. The next ones are the $12 ones. And multiply. Alright, now we need to see how many are left. What's left? So this is what we had before. Remember, we got rid of all these, so those are gone. We don't need to do anything with the 13s. The 12s, we had 120 and we got rid of 50. So we're going to have 120, get rid of, subtract the 50, so we're down to 70 at 12, and it's multiplying for us. And then all of these are still there. So all the $300 ones are still there. And that's multiplying. Now let's do a little checking and make sure everything's where it should be. 2 purchases, yep, 2 purchases, and it adds up. And 2 sales, and we want to make sure this all adds up. Yep. And as of the end of the month, we've got this area right here, the 3,840 left. And I'm going to compare that. Remember this guy right here, the 4,045, that's cost of goods sold. And the 3,840, that's ending inventory. So even just between these two methods, we see a little bit of a difference. Cost of goods sold is more with FIFO, and ending inventory is less with FIFO. So that's the FIFO method, and you really see it right here in this last sale, where we're dipping into 2 different layers of inventory. Let's keep going. Let's take a look at LIFO. Same idea. We're going to start with our beginning balance. 300 at 13. The 9th sold 200. The only ones that we could sell are the 13s, so same as before, multiply, and what's left? 300, subtract what we sold, so same as before, oops, and 13, so that's where we're at on the 9th. 16th, purchase 120, 120 at 12, and multiply. And again, we've got these 2 layers of inventory. Keep them in order. So we had the 100 at 13 first, and then we had the 120 at 12. The 18th, another purchase. Purchase 300 at 10, multiply. And now we've got the 3 layers, the 13s, the 12s, and the 10s. So let's get all those in there. Here's the 13s. Here's the 12s. And here's the 10s. Okay, now the fun part. Now we get to do some LIFO. So now we're at this sale at the end of the month, sold 150. And again, I'm going to sort of pencil this in. We're going to have 150 coming out, but we got to figure out which ones were sold for 150. So this time we're doing LIFO, last in, first out. So we're going to look at what we've got, which is right here. We've got 3 layers, 3 kinds of inventory. Now we're looking at last ones in, first ones out. So we're going to sell 150 of these $10 ones. 150, 10, and multiply. Now we just, our last step here is to go through those 3 layers and keep track of what's still there. We didn't do anything with the 13s, they're still there. We didn't do anything with the 12s, they're still there. We did sell some of these, we sold half of the 10s. So we had 300, we sold 150, of course we're down to 150 of the $10 ones. And then let's check and make sure things are looking right. There's our 2 purchases, yep, and here's our 2 sales, yep, and then here's where we're at the end of the month. We've got these 3 amounts left in ending inventory. I'm going to go ahead and copy that down. This is just a little added extra thing. This is total purchases, cost of goods sold, ending inventory. Let's compare that to FIFO. FIFO had higher cost of goods sold, but LIFO has higher ending inventory. And then we can compare that to the specific identification method. That one was right around 4,000 each. And we see how these 2 methods, it's a little bit different. It's a little bit different way of costing. Let's keep going and finish off the weighted average method. Weighted average, we start again with beginning inventory. Multiply here. Yeah, very good. And then the 9th, that was a sale of 200. And multiply. And now we're keeping track of what's left, the balance in inventory. We had 300, we sold 200, so we got 100 left. Yeah. And multiply. And the 16th, purchase 120 at 12. Okay, let's get that. Oh, I got that in the wrong spot. Let's undo. I need to be right there. We go. 120 at 12. And multiply. Now, how many are left over here? What's going on here with our ending balance? And this is where it's going to be a little different for this method. Now we're going to look at total quantity. We had 100 and we added 120, so now we're at 220. So 100, hang on a second, 100 plus 120. We've got 220 units total, excuse me. And our total value is 1,300 and 1440, so we're going to add those up. So we've got 220 units total, and the total value is 2,740. We're going to divide to figure out an average unit cost. So equals the total divided by the quantity. And that makes sense that it'd be $12.45. It'd be somewhere between $12 and $13 per unit. I think we should add some calculations over here to the right that just give us a little bit more about that. Let's keep going and finish off this this particular problem, this method, I should say. Purchase 300 at 10, multiply, and now we're doing totals, total quantity, 220 and 300, 2740 and 3000. And we're going to divide to find the average cost per unit. 1104. Let's think about that. Now we've got 10, 12, and 13 for unit cost. So yeah, 1104 is reasonable. Again, I'm going to put the X there so we can add some notes over to the right. And let's finish it off. Sold 150. Sold 150 at 1104. Remember, this is the different method with the average unit cost. So sold 150 at 1104, multiply. And what's left? We had 520, we sold 150. Still 1104. And multiply. So I knew we weren't going to need all these rows. Let's get rid of these rows. Let's compare that one to the one right above it. We had the LIFO up there. So again, it's close. You know, it's in the ballpark, and it should be 4,000, 4,000, but this one's a higher cost of goods sold. So it's going to be a lower ending inventory. 4,000. So it's, again, ballpark, same idea, but a little bit different. Now, the weighted average method is the one that gets students a little bit mixed up sometimes. So over here where I've got my, let's put it right here. Notes on July 16th. 220 is equals 100 plus 120. I'll have to do a little fixing up on this formatting here. Let me do that again. 2740 is 1,300 and 14,440. And 1245 is 2740 divided by 220. Again, sorry about this. I need to do a little cleanup over here. Let's get those all tens, no formatting. Notes of, notes on, notes for, notes for. So if you're just looking right here, this is the first time we had to do that average thing. So we start with how many do we have? 120 plus what we purchased, 220. What's the total value? What did we have plus what we purchased, total value? And then divide to get your average unit cost. Let's do the same thing for July 18th. Notes for July 18th. And I'm going to try and fix this up front. We want 10. We want no formatting. Let's underline that. Okay. So for July 18th, we're going back through, how did we get these guys right here? So 520 was the 220 plus the 300. And how did we get 5740? That was 2740 before plus 3000. So 5740 is the 2740 plus the 3000. And how did we get the 1104? 1104 is the total value, the total amount divided by the units. So 1104 is 5740 divided by the units, 520. So again, the weighted average method is the one that sometimes gives students some problems. This would be one that might be worth going back through and maybe double checking your calculations just to make sure you're A-OK. And we are going to stop right there. Another thing that's kind of fun to do with these is to compare and contrast. Specific identification method, what did we have, FIFO, LIFO, and weighted average, what did we have for all those methods. Now, what's the point of all this? The point of all this is to calculate ending inventory for the balance sheet and to calculate cost of goods sold for the income statement. And depending on which method you use, you're going to shift those values just a bit. This is something that has to be disclosed in the financial statements. Companies have to say what method they're using. A lot of companies use FIFO. So you'll see in the financial statements FIFO. I'll go ahead and take off the freeze panes. Let's just look at this one more time all the way through. This is a great practice problem that gets at all four methods. Specific identification, what did we do right here? We're looking at which ones were sold. And they had to tell us that. So when you're doing specific identification, look at the information that's given so you can see what's happening. We need to know what's being specifically identified. FIFO. FIFO, first in, first out. So right here we're taking out first one's in, first one's out. LIFO. Right here we're taking last one's in, first one's out. And weighted average, for each one of these, we're calculating that weighted average, like the 1245 and the 1104. So that's an example of inventory valuation methods. Nice work today.